Hello and welcome back to an episode of the CTO Show with Mehmet. Today, I'm very pleased. Joining me from the US, Rylan Folts. He's the co-founder of WealthFeed. Rylan, thank you very much for being here with me today. I really appreciate the time. I know how busy things can be. Just for the audience, I give them short teaser about what we're gonna be talking about today. So, from the company name, we're gonna talk about wealth management. We're gonna talk about fintech a little bit. We're gonna talk about the AI part. But without further ado, Rylan, again, thank you to be here with me on the show today. Give me a little bit of background about you, what you've been up to and what you're currently doing at WealthFeed, and then we're going to start the discussion from there. So the floor is yours.
Awesome. Perfect, Mehmet. Well, appreciate it. Thanks so much. Excited to be on this podcast. Heard great things. And I think we're going to dive into a lot of things revolving data, wealth management, financial advisors. So really excited to kick this off. I'll just go a little quick background. Again, Rylan Folts, co-founder of WealthFeed. I'll give you a little bit of background and then kind of show you what we're doing today.
Sure.
But I came from the wealth management space, so spent 7 years as a traditional financial advisor. So spent some time at JP Morgan's private bank, kind of focusing on ultra high net worth individuals there. So, families that had over $25 million plus, helping them manage estate planning, tax planning, asset allocation, kind of the whole gambit. And then spent some time at a couple other firms in the independent broker dealer channel, as well as more of the traditional REA. So, if any financial advisors are listening, they kind of know there's three channels really where, there's the wirehouses of the world. So think kind of the UBS, Morgan Stanley's, JP Morgan's, and then there's a lot of the independent broker dealers where you're kind of attached to FINRA, but you run your own kind of name under a DBA. So you could think of Cetera's and Mosaics of the world, LPL, and then now there's kind of a big revolution of a lot of people going independent, and that's why you see kind of RAs popping up left and right. So I spent some time at all three channels, and what I notice and kind of feeds to what we're doing today is that organic growth is extremely challenging for all advisors. I think it's tough for everyday people to want to talk about money. No one likes to talk about how much they make or how much they've saved or, even how much they bought the house, even though, that's all public data, funny enough. And so, from the wealth management lens, it's really tough to aggregate new business. Outside of referrals, most advisors, I would say, aggregate business to referrals. So what we've kind of built today after, that 7-8 year run as an advisor said, hey, there's got to be a better mousetrap to really help advisors grow. I set out with my co-founder who was out in Chicago to say, hey, let's go build a prospecting engine to help advisors grow. And that's kind of what WealthFeed is today. It's really a full end-to-end business development platform for advisors. And so we launched that about 2 years ago and really helping advisors all across the US get in front of that right person. And we can talk a little bit more, but at the end of the day, it's an organic growth tool for advisors.
Great. And thank you again, Ryan, for this introduction and the background. Now, of course, I try as much as I can, although like I'm not the expert in all the fields to get some information. But I think wealth management is one of these domains where traditionally, because even myself as professional here in Dubai, like or anywhere in the world, like you would be approached by people, and usually they try to have this what we call it even in sales relationship driven relationship, right? So
Mhm.
how that in this market now with AI powered prospecting becoming relevant in your opinion?
Yeah, I think AI is changing the game in multiple ways from the advisor. The good thing where it's not replacing the advisor is, people want to talk to an actual human, especially when they deal with when you kind of get into above like $1 million of net worth. And we see that all the time. You're never going to lose, you want that human trust element because trust is so big. And so, I see AI as not taking over the wealth management position, but almost like enabling advisors to help them grow more, and also just keep them from doing the stuff they are best at. Advisors are always better at whether it's asset allocation or talking to their clients versus like all the note taking and all the administrative tasks. There's a ton of document stuff and filling out proper compliance forms. It's a heavily regulated industry, so AI is really helping consolidate all those tasks that aren't really that important in a relationship. So advisors could go out more and prospect, as well as help more clients. So it's really freeing up, and that's where we see a huge tailwind. These AI applications are
Mhm.
creating more time in the day for advisors. They're not bogged down by administrative tasks anymore. And so that gives them more opportunity to grow. Instead of an advisor typically having, 100 to 200 clients, they could have 2, 3, 400 clients now, just given where AI kind of comes in to help their book of business.
Right. Ryan, in your introduction, you mentioned something interesting. You mentioned about, the very well-known big firms in this space, and you said like a lot of people they're going out by themselves. So how do you describe the current state of, because there's a lot of innovation that needs to happen, I mean, in that space also as well. Are you seeing like these traditional players more like cautious, of adopting, something that can enhance their offering, though, a lot of people they're saying that they are slow, nothing is changing here, let's go out by ourselves and try things out? Or do you think they, financial institutions being financial institutions, and we discussed this with many guests on the show here, by nature they move slower, but at some stage they would be accelerating. So what's your take on this?
Yeah, I think, all big institutions move like a turtle, honestly. It's so slow. And I think that's really the biggest motivator of why people end up, leaving the big wirehouses, the Merrill Lynch's, Morgan Stanley's of the world, and just starting their own. Because at the end of the day, every financial advisor is actually pretty entrepreneurial. It's really your own business at the end of the day. I mean, most of them are commission based and stuff like that. And so you're already that entrepreneurial mindset when you're an advisor. So, if you stick an entrepreneur and you put them at a big firm, you're going to clash a little bit just because, hey, especially now how far AI is accelerating, the firms aren't as quickly to adopt is where a lot of advisors are ending up leaving. And so it's a really big risk to all the big banks and the big wirehouses of the world where if they don't catch up quick enough, those advisors are going to leave because they're seeing a, advisor across the street isn't spending, 5 hours a day, doing account opening and doc creation, all these admin tasks. I just, start my own thing. I don't have to do all that and I can make more money. And so, definitely, I think that there is always, no one wants to jump in the sand first in a little bit. And I think the bigger institutions are always last. Um, you could say that's sometimes a good thing and a bad thing. I think today it's probably a little bit more of a bad thing just because how far this advancement's actually really helping advisors. So we'll see how it all plays out. But they always come around. It's just maybe a 5 to 10 year lag
Yeah.
around it. So
Yeah, let's see how this will develop with time. Now,
yeah.
let's deep dive a little bit in your offerings and the value proposition that you offer, Rylan. So first, tell me, like, because maybe the first question, as someone who works in sales, I used to be like, all the time having these objections. So I gotta play the devil advocate a little bit here. So what makes your offering different from like any traditional CRM or prospecting tool that some of the advisors might be using today, and how much the AI powered prospecting actually can enhance and change the way these advisors would be carrying their day to day workflow?
Yeah. No, great question. I think in terms of how we're different, there's a ton of prospecting tools, mostly on the B2B side.
Right.
So not too many on the wealth management side. We're the first to come to market. There's a couple others that have popping up, but think of your big kind of, I always think of like the Zoom infos of the world, these big, B2B databases, which kind of own, who works where at what company, what's their work email, are they what's their job position, job title, all that stuff. We kind of came in and taken a different approach and said, hey, from an advisor's lens, if you're trying to most of them are like, hey, I'm reaching out to CEOs because, hey, I think they have a lot of money. And what we've noticed is just because you're a CEO doesn't mean you're the right, perfect, fit at that right time. There's always a right time, right place, especially with wealth management. No one's really ACATing, and I say ACATing, transfer securities to other advisors randomly. No one wakes up one day and is like, you know what, I'm going to hire a financial advisor today. As I probably wish it was that easy. It really stems, and this is kind of our core differentiator, it really stems from some sort of catalyst event in their life. So when I say catalyst, think of like money in motion. Some sort of, hey, I just moved, or I sold property, or I sold my business, or I just had a baby. These life events that people go through, everyone goes through them. That's usually, there's a time frame right after that where they're like, hey, now's the time I need to get my stuff together. I need to figure this out. I need help around it. And so that's really where we come in and focus, is saying, hey, there's so much public data out. We kind of took a data lens. And this is, 3 years ago, before kind of AI was cool, and said, hey, we can now aggregate all this data utilizing AI under the hood quickly. So that advisor doesn't have to go to Zillow and look at what property transacted, and then go to the property appraisal site and see who bought it. And then, try to find an email here and Google and end up on weird websites to get their phone numbers, just to make, a call to the, hey, welcome to the neighborhood. We said, hey, what if we just aggregate all this data, this life event data, people selling businesses, selling homes, getting married, inheriting money, and then feed it all to a platform and really layer on net worth. I think at the end of the day, advisors care who they're reaching out to. They want to make sure they're almost qualified it on a net worth basis. And instead of just guessing that a VP of sales is worth X amount of money, or, hey, a CEO is worth this, I could kind of now bring in a lot of more data points for us to give that advisor a really high targeted, net worth score in a way, and saying, hey, if you want to reach out to people over $10 million, here's the audience for you. Instead of spraying and praying, that your messaging is getting in front of that person. And so, where we come in, we're that data broker at the end of the day, aggregating so many unique data sets to help the advisor with more insights around net worth, around where they live, and then specifically those life events. So that's kind of our main differentiator that advisors utilize. It's really those net worth filters, as well as those life event filters that we bring to the platform.
Right. And correct me if I'm wrong, right? And feel free to elaborate a little bit more. So this is it's like music to the ear of everyone who would be like prospecting. And I think, of
Mhm.
course it applies to your domain, but if I'm selling to certain persona, I wish I have all the information I can, as you said, instead of spraying and praying, as we say, like in sales, and waiting, like, okay, maybe we will hit someone who would be in this moment interested. Now, when we apply your offering, are your clients seeing more meetings? Are they seeing like better outcomes from these meetings? Or is it like, the response rates are higher? Like what kind of, yields they can see when they start to use the platform?
Yeah, no, I think instead of, we've seen a ton of case studies, on the platform, and it kind of goes down. What we're trying to solve is, obviously there's a time element. I think that's what, all of AI is really solving, is just speed to market, timing. Instead of taking days to write this email or write this, 10-page paper, it could do it in seconds, and that's almost kind of what we're bringing to advisors. Instead of spending hours and hours and hours prospecting, or if you want to do an event, trying to gather your audience, you could, log into our platform, filter for, who just moved to your area. And now you have a list of 100 people and all their contact information. And in really a split second for you to click a button, and it could send an email out or send a direct mail to, peace out. So, we're saving advisors tons of time, and being able to scale their audience and their niche. In terms of success rate, it really depends on the advisor. We're giving them all the tools. We've seen, like, instead of having to, call 100 people, you could call 10 and get the same result because of that money in motion overlay, and that's kind of the biggest piece is capturing someone at the right time and at the right place. And that's really where advisors have success. But every advisor, is so different on their niche where it's a little tough to have a full baseline layer of an ROI. But just to give you some insight on that.
Right. Without going too much technical, Rylan, like I believe, and you said like you aggregate a lot of data. Uh, are you building, some proprietary models, or like you are fine tuning existing ones? Like, of course, if there's anything which is like kind of business secret, I can understand like nothing can be shared. But is it like more a model building approach, or is it like orchestrating multiple systems together?
Yeah, no, great question. Our moat is our data pipelines. That's the secret sauce, and we're really well positioned. And I think now, with AI and now Cloud Code with the big updates and ChatGPT, software creation is really easy nowadays, and that's why
True.
just at a macro level, software multiples are kind of decreasing, and we're getting a lot of volatility in the market on any, like you look at Salesforce and some of the big players, kind of their stock price and seeing what they've done. And so we've taken, and we've always had this mindset kind of before this has happened is the gold, the liquid gold is the data. And so we've always kind of focused on the data end and let the platform and software come. And now with AI, we could build crazy like software overlay on the data, but starting, our when we built this, it wasn't like a sexy front end platform. We're just focused on the data of how to aggregate these very unique life event catalysts. Like inheritance data is something that no one has cracked the code that we've kind of built internally, and that's probably our biggest proprietary data pipeline. And looking at how can we capture this $70 trillion of wealth changing hands. Everyone's talking about the great wealth transfer. Boomers control 90% of the assets. Well, in 10, 15 years, all those assets are going to flow, and we're kind of positioned to capture, Bob Smith just inherited $5 million in this property and whatnot. And so we could give that now we serve that up to a platform for advisors to really filter down and reach out to. So it's all data aggregation on our end, and it's hard. And where we've built a lot of proprietary things, there is a lot of the identity resolution that we call making sure, Bob Smith that lives in Arizona is the same as a different Bob Smith that lives, a street over. And so it is a crazy world once you dive into the data and how much public accessible data there's out there. But it's very messy. The data world is extremely messy because no one kind of runs like, there's no like, hey, this is the base layer. Every time you aggregate data, you get a little bit more information. So you have to end up aggregating, hundreds of different data feeds to kind of get to the end result. And that's kind of our moat.
Right. Speaking of data, Rylan, and this is again, of course, in fintech and the broader finance industry, and as we know in other industries as well as health tech, and all these highly regulated industries, the trust is very important, and it's everything. So how did you manage to build the trust, especially because you're dealing with a lot, and I can imagine, the amount of data that you're aggregating, and you're building the whole offering based on it. So like how did you build that, and what, like this is, I'm asking for the broader also, maybe founders and entrepreneurs in that space who would think that it's a highly regulated industry, like there are like cautions and precautions that I should be aware of. So tell me a little bit more about that aspect, which helps in building the trust.
Yeah, no, definitely. If you said, hey, 5 years ago, I want to build, and sell to now these institutions that we're selling to. I mean, we're selling to all the big wirehouses in terms of, access to the platform and gone through all those compliance approvals. It's a little bit like you think we're crazy when we initially said the idea, because they're like, hey, no way, the big banks like approve that, no way. that's to all the entrepreneurs listening and all the founders, like that's when you have that idea, like if someone ever tells you that, like, hey, no way in hell that, this is going to happen. You're on the right path in a way. And so that's kind of what happened to us. And we were now kind of ahead of our time in terms of the AI revolution and what's going on. And now people are just trying to catch up because it all comes back to what our thesis was. And our thesis was, hey, advisors aren't growing quick enough. And firms now, and back then in 2020 and 2021, when we're kind of just getting started, there was a lot of M&A happening. And so these PE companies and consolidators out there were buying all these books of businesses. And that when you see that happening, okay, the next 5 years, they're going to have to grow out of that. They paid a premium to a multiple. They really have to grow out of that. And so, we were just lucky enough that that whole low interest rate environment happened in a way in the wealth management industry of different books of business, because now, all those companies need to grow and make their money out. And so the best way to grow is using a tool like us. And if your back's against the wall, some of those, the compliance measures kind of say, hey, we got to get this done. Someone at the top's like, at the end of the day, we have to get this done. But in terms of our platform, it was actually easier than we thought to kind of get, to build trust with a lot of these big institutions, because that data is all publicly accessible. So, what we saw is like advisors could like I said, go on Zillow and find a property that sold, and then the property appraisal site's all public, so they could find the person on title, and then you could go to LinkedIn and get their contact information. And so you end up like that it's already there. It's almost like no one has built kind of the AI phone book in a way that is kind of how we structured it. So it was an easier process, but for all those entrepreneurs and founders on the podcast, if someone says it's tough, that means you're on the right path.
And let me ask you something about the early days also, Rylan. Like, I'm sure like there were some metrics that you said, like if we achieve these metrics, like we are on the right track. In a domain, or let's say a vertical like yours, like what were the metric that really mattered in the early days, that also you saw were, important for the later stages growth of the company?
Yeah, I think as a founder, you're always looking for product market fit when you first launch. And I remember we sent out a cold email blast. I think it was to 1,000 people, like 1,000 advisors. We said, hey, we didn't have anything built, but we said we had it built. Sometimes that's what you got to say, to just see what product market fit is. And we kind of laid out, hey, we started our kind of bread and butter was on the inheritance side. And I think we sent out an email saying, hey, we could help you identify, people who received inheritances in your neighborhood. Like, respond if you're interested in this list. Like, we're just kind of a data vendor list at that time. We didn't have the full platform. And I think we got like 150 people, or almost 200, so 20%, which is crazy. Usually it's like a 1%, hit rate
Right.
back, saying, oh, I would take that list. Like, oh, I'm interested. And so that's kind of when we knew, hey, we had something that could, catch fire and really scale. And so I think, you just gotta always try to find product market fit and just test different things, and make it simple. I think especially for the fintech and anyone that's selling into the wealth management space, these are simple people. They're not CMOs, or they're a little behind kind of the normal, I would say, like B2B companies that have built out, crazy mousetraps for, social media campaigns and different stuff like that. Most of these advisors just want to make their clients happy. And if you just help them find more people, like they love it. And so sometimes just being a little more simple on kind of your initial product. And I see a lot of people make mistakes, like trying to build the most complex thing, and then they don't have product market fit, because, no one really wants to try to understand something versus starting small and then building on top of the platform to kind of make it your end product.
Right. I liked your approach about reaching out to people before you build that. I think like uh, this is one of the most successful tactics or strategies, I should call them.
Mhm.
And I think successful for many entrepreneurs. Like the famous one that I think many people by now knows about it is Dropbox when they did the same thing, right? So and I think it's good because you don't want to spend time. Now, of course, maybe someone would argue with me and say, hey, with this vibe coding tools that are popping out, yeah, maybe you can show a kind of an MVP and ask
Oh
people like
yeah.
if they're interested. But yeah, if we go back before this era, which is not very a long time ago, yeah, I think this was the right approach. Now, I'm gonna just try to combine these two questions into one. And people, especially my guests, they say sometimes I ask loaded question. I don't intend to, but it's like two related things together. So now we're talking about prospecting and the way you're offering a clean overview of certain prospect to the advisors. So do you believe AI will be able also to go beyond just like the prospecting part, maybe augmenting some of the work that the advisors they would do, and how would that have biggest impact on the fintech industry in the coming few years, in your opinion, Rylan?
Yeah, no, great question. I think what we've built now, I mean, it didn't start like this, but this is kind of the V3 is the full end-to-end prospecting solution. So not just the data audience side of it, really the augmentation and the multi-channel approach. And so today, if advisors signed up to with our platform, you have that full data engine around it, but you also what we call like a marketing hub that could do all the automation for you. So we have multi channels, which is I think a lot of people forget that if you want to build your brand, you need touch points, but in different types of channels. There's face to face channels, there's physical mail channels, there's email, there's direct mail, there's text message, there's LinkedIn. And so we've kind of built, piecemeal this together to build, a multi-channel outreach. So we actually have like a postcard direct mail solution. We have a really neat handwritten note that a robot is actually like writing the handwritten note, and it looks like a wedding style invitation. So advisors could send that out to people in their community. We have LinkedIn integrations where you could automate connection requests and automate LinkedIn messages. We have email automation, almost like a CRM, where you could do email blasts to that ideal audience. We have like auto call and text spec features. And so now what the advisor could do is let's say they focus on a certain niche, and this is kind of where advisors have success of saying, hey, I want to focus on doctors. Well, in 2 seconds, you can, build that like who's the doctor in XYZ county or city or zip code. And now we could automate, real relevant content to them via email, direct mail, text, LinkedIn. So you're getting kind of that relevant content right to them at their fingertips. And that's the best way to build trust. At the end of the day, like you said, like we need to build trust with these institutions, but at the end of the day, more importantly, the advisor needs to build trust with the consumers. And the best way to build trust is just relating to someone at the end of the day, especially if someone you don't know. As soon as you say, oh, you're a doctor, I was a doctor for 10 years. And that's why I built my financial advising firm, because, doctors, I didn't have the correct insurance. I didn't, allocate my money right. And so as soon as you kind of break the ice and says, hey, I'm just like you, that's where that trust barrier kind of goes away, and advisors have success. So we're just trying to help advisors kind of connect the dots there around it. But yeah, to answer your question, the platform is really full end to end. So you could click a button and now it just drips on, call it, your niche every month, multi-channel approach type of deal.
Yeah, I like this. Because we talk a lot about personalization in the age of AI, and I think this is very, very important because we are seeing it a lot on LinkedIn and other platforms where people complaining about like, yeah, it's an automated message, and if yeah, like of course, like it does the job, but if you keep repeating it in a robotic way, you get like the robotic answer from the AI, right?
Yep.
So I love this approach. You mentioned also something like you reach out to your customers directly. So I believe it's a kind of a from go to market perspective, it's a direct sales, right? Have you also implemented any kind of partnerships, any part like maybe education? Because I believe, especially when you come up with something quite new to any industry, like you need to do a lot of education. So, what have worked the best for you, Rylan?
Yeah, no, definitely the edge. We're like consultants in nature because every advisor that signs up with WealthFeed and gets started, usually I would say 60% of the time hasn't been doing any marketing. They come to us as kind of their first swing. And so there is a lot of there's a learning curve to it because, most of these like the majority of advisors, have kind of just didn't even almost they had a website, they haven't updated it in 30 years. They probably never posted to LinkedIn. They never reached out to anyone new. But they're like, hey, I want to grow, and there's so many new tools out there I want to utilize. And so, really, just building blueprints have helped us the most. And I think just blueprints for success and showing them, hey, here's where you are today. Here's what an advisor that's having a ton of success. Here's what their world looks like. Here's what their website looks like. Look at their LinkedIn profile. Here's what they're doing. They're sending out direct mail to their specific niche. They're also, posting once a week on Instagram and TikTok and stuff like that. So just showing them the road a little bit. And here's how our platform could help you get there. Just kind of lays it out, because I think everyone is a little bit nervous to jump into the marketing game. And it is because there's a lot of trial and error to it. I mean, the amount of money we spent on Google ads and social media ads, I mean, you could conferences. I mean, from a business owner standpoint, we know that. We know that, we could write big checks and get a zero from it, but that's just part of the game. But kind of how you scale marketing is just showing them, hey, there's a path to success. You really need to be a consultant. And so that's kind of how we help advisors. It's just really showing them almost like an aerial view of the success and the path to get there.
I like when you said it's part of the game. Like this is the entrepreneurship mindset at its best, because a lot of people, they think, yeah, like, oh, like we will build and they will come, and like we have the best technology, so everyone should be buying from us. And yeah, like these are the realities that a lot of entrepreneurs, they face, especially if it's, they didn't have skin in the game before, they didn't work maybe with other startups, or maybe it's their first experience being entrepreneurs. And I've seen like people do this mistake. They think, yeah, we'll build, they will come, yeah, but you have to expect these lessons. Now, if you mentioned about, the vision and where you kind of want to be heading, Rylan, but if I come back and I sit with you maybe 2 to 3 years from now, what wealth feed would be like by that time?
Yeah, no, that's a great question, and I sometimes think of that too. I'm a big vision guy, and so I think at the end of the day, my vision is like every small business. I consider an advisor kind of a small kind of solo business. Most of them are, or team businesses. Every small and medium sized business needs to be doing some sort of outbound, and I agree, and especially in now with AI, how easily apps could get created, how easily people could start businesses. You're going to have to separate yourself. So my thesis is that like advisors, like people are going to have less and less businesses just on referrals. And I think there's a ton of businesses that you could talk to and that says like, I never paid $1 for an ad, or I never, everything comes from referrals. And I think that's just going to change a little bit given the barrier to entry to build a business. And so, we want to expand outside of wealth management, not, just because there's other, verticals that, this data is powerful. Like, let's say I build a brick and mortar store of a high end, it could be like a salon or a high end gym. And I'm like, hey, I want, how do you get people to your gym? Well, I could hop on WealthFeed and search, hey, who just moved to my area? And now I could be sending them, a free week gym membership at my gym of people that just moved to the area. And so the platform really could mold into other verticals, not just wealth management, because we have the net worth aggregator, but knowing someone's net worth is great for all businesses. If I'm a luxury good. If I'm a Ferrari dealership, I want to know who's the wealthiest
Right.
person in XYZ city and market to them. And so hopefully the next time, a year or two, and this is our roadmap, is to, not just have the wealth management financial services sector, but the luxury goods, the any business that wants to do some sort of marketing, have the ease to hop on the platform and aggregate their highest converting client.
Yeah, I feel the sky could be the limit here. With the two examples that you gave, I'm thinking out loud. You mentioned about, like, luxury buying. I thought
Hmm.
about loyalty programs also as well, like
Hmm.
membership kind of
Yeah.
programs that they run. Yeah, so I think, yeah, because again, you're sitting on bunch of precious data that can be translated into needs, into something other than wealth management. So, yeah, looking forward to see that maybe in couple of years, Rylan.
Yeah.
Now, as we come close to an end, like maybe final words to fellow entrepreneurs in the fintech space, and of course, my traditional question: where people can get in touch and find out more.
Yeah, no, I think and this is my mindset. I always kind of just keep thinking every day. Like my thing is keep going. Just in quotes, like just keep going. And there, it's a roller coaster. And some days you think you're gonna go bankrupt, and it's the last day of your business. Some days you think you're gonna IPO and be $1 billion entity. And so you just got to keep going and kind of put your head down and know that vision, have that mission statement, and know like, hey, I see that, in the next 5 years that, everyone's going to have an organic growth tool on their desktop. And that's my vision. And it keeps me keeping going. And so that's my biggest advice there. And if anyone would like to reach out, feel free to add me on LinkedIn. Happy to, connect with them. Again, my name is Rylan Folts, co-founder of WealthFeed. You could also check out our website too if you're a small business owner and saying, hey, I want to grow and get in front of some unique and access some unique data sets. The website's just wealthfeed.com, wealthfeed.com. So, no, but Matt, appreciate you having me on. This was awesome. And excited to come back here hopefully soon. But
Sure. The pleasure was all mine, Rylan. Thank you very much for sharing, your insights and your experience as well. I really appreciate that. For the audience, the links that Rylan just mentioned, you will find them in the show notes. So if you're listening on your favorite podcasting app, all the links, Rylan's LinkedIn profile and Wealth Feed website, you will find them in the show notes. If you're watching this on YouTube, you'll find them in the description. And this is how I end my episodes. This is for the audience. If you just discovered us by luck, thank you for passing by. I hope you enjoyed. If you did so, give me a favor, subscribe and share it with your friends and colleagues. And if you are one of the people who keeps coming again and again, the loyal fans to the show, I really appreciate you. I appreciate your help. Uh, 2025, I was always telling you, like, we are ranking from time to time in one of the countries in the top 200 Apple podcast charts. Like this year, again, we're repeating this, but this time on a massive I would say scale. Last week, it was the first week of March, we were able to enter actually 12 Apple Podcast charts, top 200 Apple Podcast charts in 8 countries. And this is a first. And this cannot come without people either referring each others to listen to the show or the same people who keep coming. And I can't thank you enough for all the support. That means a lot to me. And as I say always, stay tuned for a new episode very soon. Thank you. Bye bye.